Hey guys, Austin Shoemaker here with Neighborly Home Lending. I got Levi with Kastner Insurance Group with me. We're going to give you guys like an introspective view on what's going on with the homeowners insurance market and really how it relates to both obtaining financing for a home and also just like a generalization of what's going on in the insurance market, because things are changing pretty rapidly just as we're entering a new market from last year's storms and a variety of factors that we'll kind of go over with Levi. So Levi, why don't you tell them a little bit about yourself and yeah.
Hey, I'm Levi Kastner Insurance Group, and I've been an insurance broker for 14 years going on, and just want to give a little bit overview of the rapidly changing home insurance market and kind of what's going on and what can be done and possible solutions, and maybe some helpful hints if you're looking for a house, buying a house, you're getting financing, some things you can do to on the front side to help out with the whole closing process and everything.
Yeah, so I can kind of add a little bit to that. So really the first component we'll probably talk about here is the actual homeowner's insurance premium and how that affects qualifying for a mortgage, right? So one of the biggest driving factors of eligibility and qualifying is what we call a debt to income ratios, right? So it's how much income you have in relation to the debts. And when insurance premiums rise, that's part of that debt to income ratio because it gets factored into your monthly PITI, which is principal, interest, taxes, insurance. So as that goes up, that also, as a function, your debt to income rises. So as insurance premiums go up, it makes it harder and harder to qualify. And as we all know, interest rates are going up. So just a lot of constraining factors. I guess Levi, kind of give us an idea of, where insurance premiums were as a whole, just kind of run of the mill, a year ago, and where they are right now, and how that's kind of changing, how the landscape is changing.
So insurance rates there's a bunch of factors that go into an insurance rate, one being the zip code, the client's information, previous claims, current claims, updates on the house. But last year you were probably looking about, on an average, just say what's the average price on $250,000 in Lafayette or in Acadiana. You're probably looking at anywhere from $1,500 to $1,800 depending on coverage. But now we are seeing with multiple carriers leaving the market, becoming insolvent, or just choosing not to do business or to restrict business in Louisiana. So it's creating limited markets that are available for home insurance quotes. And then you're seeing
just like carriers leaving, I guess.
Carriers. So now you're seeing $1,500 to $1,800. Now you're seeing like $2,500, $3,500 is the normal. I'm telling any realtors, lenders, get the home insurance quote out of the way first and foremost. If you see a house you like, get the home insurance quote first before you kind of do anything, just because the prices are they're so high. They were already getting higher because of like the past two hurricane seasons.
Yeah, like as a lender or a realtor alike, that should really be your first stop in terms of your internal process. Is just getting an insurance quote, getting a flood insurance quote, taxes, everything. It's kind of just part of doing the due diligence to make sure that the client is actually going to qualify for that particular property, because it's insurance is just not a one size fits all.
No, absolutely not. Especially now. Yeah, especially right now.
Right.
So you're taking in southern Louisiana, your Kaplan, Abbeville, Erath. You're going to basically have to go to Citizens.
Right.
And the problem is all these other carriers are leaving.
Expound on Louisiana Citizens. What is that?
So that's a great question. Louisiana Citizens is basically the state-run insurance company that is a property insurance company for last resort. So when you can't find coverage in the primary markets, you go to Louisiana Citizens.
And the primary markets would be things like Progressive,
Liberty Mutual, Safeco,
State Farm.
So
the bigger name companies.
Yeah, the bigger name companies, or even some of the smaller Demotech carriers. But that's a lot of the carriers that have been, becoming insolvent or leaving the state.
Right.
And I actually have some interesting facts and figures. This came out from Louisiana Citizens, just to give you a kind of a market overview of what's going on in that market. Over 80,000 policies in Louisiana will be canceled by insurance companies by July 15th.
Wow.
Citizens is going to have to assume take on most of those policies because there's not really very many carriers left in Louisiana. 3,500 insurance agencies are submitting policies to Louisiana citizens. 3,500 to 4,500 property residential quotes every day.
Wow.
1,000 to 1,200 policies written every day in the system.
And I assume their norm was probably like, what, 50 policies a day?
If that.
Maybe.
If that. I think you've seen an uptick over these past few years, and we can expand on why we're seeing that. But I mean, it's just kind of crazy. So, and to give you some perspective, in 2005, the policy count grew by 40,000 policies after Katrina and Rita. The policy count just this year alone, and we just started hurricane season, has already been 32,000 policies.
Jeez.
So you're going to see a lot more Citizens. I mean, Citizens is probably going to be the primary go-to carrier for at least a little while until we see some changes in the market, or heaven forbid, knock on wood, that we have a light hurricane season. But with the temperatures in the Gulf, I'm not, I'm hopeful. But
Well, let's be cautiously optimistic.
yeah, cautiously
right?
optimistic is a good word for it.
But yeah, I mean, so in essence, from a mortgage standpoint, let's say, last year's insurance premium is $1,500 to $1,800. I mean, that's $125 to $150 per month, which is how we calculate the debt to income. Whereas right now, $2,400 to $3,600, that's $200 to $300. That's a very different calculus when we're looking at debt to income ratios, compounded by a rise in interest rates. So all that to say, it's just super important from a due diligence standpoint on the front end of looking at borrowers and their eligibility and what they can afford. It's not to say that that's going to be their insurance premium forever.
Right.
It may settle out, should settle out, we would hope. But it's very, very important right now, and a big function of our job as mortgage brokers and mortgage lenders to take care of our clients and protect their interest. So.
And I want to expand upon what's going on, what's actually causing this, and I think it's a multifaceted problem here. You have, for the last two years, we've had significant hurricane seasons. I mean, claims, I've seen estimates anywhere from 20 to $30 billion in property and casualty claims in Louisiana for the past two hurricane seasons. So you have that, you have inflation, you have increased cost of materials. Right now you have the markets are heading south, so insurance companies invest their premiums in the market. So if the markets go down and you have inflation, I mean, they're paying claims on last year's premiums, with today's dollars.
So they've got to make it up in the premium.
Yeah, so they have to make it up in the premium. In Louisiana, I think a lot of these companies had the premiums weren't enough was one of the things, and then that's just all compounding at the same time. So you have a restriction of the market, all these different things going on, and then everybody, insurance companies set their reinsurance rates. So right now, their reinsurance rates were set for last year for this year.
And reinsurance rates are like renewals?
Reinsurance rates are insurance companies have insurance on their
gotcha, on their insurance.
On their insurance,
Gotcha.
Different limits and sets. But so right now they're setting their reinsurance rates for next year. But I think with all the turmoil in the market, insurance companies are kind of seeing what's going to go on this hurricane season for Louisiana.
Right.
And so you're seeing that play out by a restriction of the market, people leaving. The smaller guys, they have to recapitalize, or they can't afford the reinsurance, or they have to buy more reinsurance than they think, just to make sure they're covering all their bases.
Right.
So that's exactly what we're seeing.
Right. So I know this kind of sounds like a lot of doom and gloom, and it's certainly not ideal, but there are some what I would call bright spots in the insurance market right now, which are mostly really new construction, right?
Yeah, new construction is still great. The house is newer than 10 years. I think you're still golden. And the other thing people can do is, I think...
Yeah, so there's quite a bit of inventory that, I say quite a bit. It's relative to where we are in the market, but that are 10 years and newer. So that's a, pretty sizable piece of the market.
You're absolutely right. And the other thing people can do is, I think, property owners are going to have to take the ball and, make sure your trees are cut back. If your roof hasn't been updated, you need to update your roof. And the past 2 hurricane seasons.
Yeah, so like mitigation plans. Like how do you mitigate the risk of the property that you currently own, right? Updated roof, like you're saying, trees.
Document. If you're upgrading your electrical, plumbing, HVAC systems, I would just document everything thoroughly. So if you're trying to sell your house, you can show those documents to the buyer, and then the buyer can show that to the underwriter of the insurance company. You want to paint the house in the best picture as possible. Because now there's limited access for the markets. They can be a lot more picky and choosy about what they really want to accept.
Right. So it's almost like you're selling the deal to the underwriter, almost, and kind of painting a pretty picture for them. And making sure the house is in decent shape.
You're exactly right. Yeah. So if it's an older house, you're going to want to have these updates done, document those updates, and then show that or have that available to the insurance company.
Okay. Cool.
The other thing, I think a long-term solution, and we kind of discussed this before I think the video actually came on though, was I think there's going to have to be a change with building codes. Mm-hmm. I think building codes on the residential side are going to have to get a lot stricter in Louisiana to if they want new insurance companies to come in again. It's got to get stricter because we have to have more sound structures.
Right. We've already seen some of that with some of the national home builders that have come into town. They've had some issues, and so I think that's already almost in the works. I think like Youngsville moved to tighten up some of their standards. So I think you'll see the municipalities, hopefully, at least, and then once the state gets wind of that or more, then hopefully they'll adopt some of those restrictions. And
that's just my opinion, but I think it's going to take people getting more involved in the process to try to get some relief in the market. But hopefully we have a light season this season, and then you just want to try to maintain your property. Keep it clean, trees cut back, make sure your roof has been updated. All these things can help people get insurance policies for the future and everything.
Cool. All right. Well, I think that gives everybody like a good synopsis on like what's going on in the market from an insurance standpoint. You have anything else you want to add?
No, I think that's it. But if you ever have any questions about loans or anything, call Austin, or you can reach out to me for insurance questions. Just here to help. We may not be able to do a policy, but I'll definitely point you in the right direction.
Yeah, use us as a resource. Right. I mean, that's what we're here for. So these are uncharted territory. So let us know if we can help. So. That's pretty much all I got. Cool.
Thank you so much.
Thanks, Levi. Appreciate it.
All right.
All right.